A lot of advisors will say, well, you're going to become a millionaire if you save $5 a day on coffee and you do it for 30 years and invest in the S&P. And it's like, I mean, maybe that's mathematically true, but by the time you're a millionaire, it's going to cost $900 for a grand slam at Denny's. And the better way to do it is to invest in productive assets that make money in your sleep.
Yeah, and the people who always do those calculators too, the numbers that they tend to use are kind of all over the place. Like they'll be like, well, let's just assume the S&P is going to return 12% over the next 40 years. And it's like, wait, why would we assume that?
Not only might that be higher than it's historically been, you're picking a leading index of a leading country. And so, it's easy to hand pick equity indices in, the largest economy in the world and say, well, they're all going to grow at this rate all the time. And it's like, well, if you looked at Rome, in like 100 AD, if they had the equivalent of an S&P, that probably would have been growing pretty fast too. But what would be the likelihood that its growth the next 100 years would replicate its growth the previous 100 years? It's typically not, that's not how numbers work. If you look at whoever's leading the major league in hitting at the All-Star break, the most realistic assumption is that that guy's batting average is going to regress towards the mean, and he might still lead the league at the end of the year, but it's unlikely that his second half performance is going to map to the first half performance. It's probably going to be a little bit more moderated.
I just looked it up on ChatGPT. The S&P has historically returned an average of 10 to 11%. So 12% is right a little is right around where it would be. But also fudging the numbers by a point or two can actually have significant impact when you're talking about the idea of compounding interest, especially over a 40-year time frame. But it also says that's
Yeah.
before inflation. So it says
Right.
it's around 7 to 8% after inflation over the long term.